How's it going, guys? It's Dennis and we're back with another video, and today we're going to be doing a YieldMax ETF review as we did with Tesla back last month. Today we're going to be doing a review on AMZY, so let's go ahead and get straight into it. So AMZY ETF, for the distribution rate on the year, is 31.42% as of today, November 15th. For the 30-day, it is 4.53%, so the returns are pretty good. Now, for the most of the video, I'm going to be comparing it to TSLY because TSLY is one of their most famous ETFs. So TSLY's return is 60.06% for the year as of today, and the 30-day is 6.03%. So it is almost double of AMZY. So, if you want higher returns, go for Tesla. But AMZY has some things that are just better. So the things that are just better are that the underlying stock is Amazon. Now, what is underlying stock? Well, underlying stock for YieldMax ETFs means that they have synthetic positions in Amazon. They do not have physical shares as ETFs such as VOO have, where they buy physical shares. They just have synthetic positions, and they run a synthetic covered call strategy on other underlying stocks such as Amazon. Now, why is AMZY a tiny bit, maybe a little bit better than Tesla? Well, because the underlying stock is Amazon, and Amazon is historically known to be a grower, right? So we look to the year to date. On January 2nd, they were at $86, and today they're at 143.20 cents. That is a lot. If we look to the 1 year, which is pretty much the same, they growing. We look at the 5 year, they had their ups, right? They were up towards 172, but they're still at $143.20 compared to their 5 year, where they're at $75.10. We look at the max. Yeah, looking at the max, there's no difference whatsoever because you can see that the growth is crazy. That's what most tech stocks look like. But besides that, Amazon is great for that sense since there's a growth. And if we look at, AMZY, wait, we better go back. If we look at AMZY, we could see that you can see the growth in the actual ETF itself. I am up 1.6%, which is $60.32 on my 184 shares. As mentioned in every single video, I would not be talking about a stock or making a review on a stock or recommending a stock. Of course, I'm not a financial advisor. I'm not telling you to purchase this stock, but I will not be talking about a stock or ETF if I am not personally invested in it. And this is actually my second highest position on YieldMax ETF. Why is AMZY my highest position? Well, because its underlying stock is Amazon, and there's a couple other reasons why we'll get into as well. So year to date, on inception of AMZY, it was worth $20.10, with its highest peak being on August 7th at $22.19. Of course, this growth and spike we saw in the beginning of the inception of the ETF is because a lot of investors poured in their money into the ETF, and of course, it started getting poured out as soon as dividends started getting paid out. Now, there was a drop in October 26 to $18.55, but if we look at the 6 month on Amazon, we can see the reason why, because Amazon, the underlying stock itself, dropped as well. Now, as of today, we're at $20.68 on the AMZY ETF. So if you did invest on inception at $20.10, you would be up 58 cents per share. My portfolio diversity, of course, 9.36% of my portfolio, so I have quite a good amount of liquidity in this ETF. And of course, this is being recorded on November 15th, 1 day before the distribution of YieldMax ETFs. And my distribution for tomorrow, November 16th, will be 54 cents per share with a total of $100.52 on my 184.8 shares. If we look at history, which we had open before, we could see that I've been investing in YieldMax ETFs for roughly 3 months. And in the beginning of September, I invested $645 for 30 shares. I got a return of $14.13 of 47 cents per share. As soon as I saw that, I knew I had to invest more. And I did. I invested on the 22nd, 2 investments of 2 purchases for 100 shares total of $1,019 and $1,006. And the next month, I received a higher return. Of course, I received a dividend for 63 cents per share at $82.82, which was, I think, one of their highest returns, which we'll look at in a second. And I then put in another 50 shares for $992, in which I will be returning for this month on November 16th, 54 cents per share of $100.52. So good returns overall for the 3 months I've been holding. And just thinking that Amazon's going to be going up, I believe this ETF will do as well, as will its dividend payouts. The reason why I think their dividend payouts will be high as well is if we look over to their IV, their volatility, we can see that Amazon's volatility for the 52-week average is 36.8%. 36.8 is pretty good. It's not the best. If we look at, once again, comparing to Tesla, which is TSLY's underlying stock, we can see it's 56.8%. Now, a lot of people in my TSLY video were saying that volatility is not good for dividends. Well, it is good for premium and contracts. If there's a lot of volatility, the price of contracts goes up. Meaning, if you look at a stock like Riot, which I have many videos on, 2-3 videos on, Riot has a volatility of 103.1%. That is the reason why I'm able to have 100% or 110% return every year on my Riot investments. When it comes to, of course, the running with the wheel strategy, which I have other videos that touch up on that. That's why if you look at AMZY and if you look at Amazon's average volatility, you can see they kind of match, right? You have a 31.42% return on AMZY and the volatility on average is 36.8. So you can see some correlation with that. Of course, this is maybe just, for this one time, but it's maybe not, doesn't work like that all the time, but I've started to see a correlation between 52-week averages and returns on the actual ETFs. Of course, with Tesla, it didn't work out like that for this payout where the volatility was 56.8% and then Tesla's return was 60.06% for this month. But you can see that 52-week high was 96.6%, meaning maybe that high took a lot of that premium that we earned and put it into our year return. So with all that information, I'm a little bit out of breath there, but with all that information, we can see that Amazon has a good volatility. Of course, it doesn't match Tesla's, and it really doesn't match Riot, but that's a whole different story. That's not a YieldMax ETF. We can see that the volatility is high, the year return is high. So what is going to be my strategy going into the investments? And of course, as seen in the title, how am I not going to lose money with this? Well, I can't guarantee I won't lose money, right? You can't guarantee that. But what I can guarantee is I give myself a better position on it. So as you can see, we had a dip. This dip was because, we had some economic troubles and there was things going on in the economy in general. But right now we're in a bull cycle, which, well, I personally think we're going into a bull run bull cycle. And we can see that our returns are, we were buying shares at $19.86. As seen before, $20.14, $20.39. So I was buying my shares at a pretty decent high price. Now, say we get a low buy-in, of course, I want to buy in. That's with most stocks, right? You want to buy low, sell high. It's usually how it works. But pretty much most of the lows are on ex-dividend date or after ex-dividend date. So my strategy going for most YieldMax ETFs now is going to be to buy after ex-dividend date, where there's mostly a sell-off. When they have those sell-offs, like we can see over here on November 7th, which was ex-dividend date, we reached a peak of 21.05, and the next day it dropped to 20.50, almost roughly 50 cents, right? Close to almost $1, but then it reached that point. So that is a significant out. 50 cents is a good amount. If we bought on that date on November 8th, we would have gained roughly 20 cents per share today, and we wouldn't have been in a growth and in a profit, as well as receiving dividends in the next month. So yeah, that's pretty much why I'm going to be investing in AMZY. That is why it is my second highest position. It's a roundup of many things. We can see that year to date, Amazon's growing. The underlying stock is growing, and it's going to continue growing because Amazon's investing in multiple things. They have healthcare subscription that's launching. They partnered up with multiple companies. They partner up with Snapchat. So there's a lot of companies that are working with Amazon. Amazon's investing into multiple sectors of, the economy, into healthcare, all these sorts. They're getting into internet soon, trying to do stuff like Starlink does. So they have a lot of, money in different types of areas. So of course the stock itself will grow, the company itself will grow. With that, AMZY will grow as well, and with that, so will the volatility. If people are trading Amazon a little bit more, there will be more volatility equaling more premium. So of course, if we look, like I mentioned before, if we look at the payouts, there's been only 3 payouts with 47 cents, 63 cents, and 54 cents. Of course, it's too early to judge what the other payouts will be because there's not a lot of historical evidence on that, as there is with TSLY, where there's been a lot of payouts. What is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 payouts. We could do a pretty decent average on all these payouts, even though it does fluctuate a lot, as we can see, and it's been dropping to the 50s recently. But for AMZY, it's been going to 47, 63, 54. So too early to judge. But if it does keep on track as it is now, these are pretty good payouts. 50 cents per share, I don't mind it. Even if it's only 31% return, 31% is a lot for ETFs and the stock market in general. And I think we've grown accustomed to believe that this is not a good amount. We've grown to accustomed to believe that we need to get payouts like 60% and 70% due to TSLY and Coney. We forget that a lot of ETFs actually pay, and a lot of stocks only pay 3 to 4%. And if you have an ETF like JEPI, they pay like 10% and 12%. Or if you have a real estate, a REIT that you invest in, it's also same story, 8% to 12%. So 31.42% is pretty much double, triple of what most ETFs and stocks pay. So I wouldn't mind it. It pays for the interest that I have on my margin, as well as it brings me in income. So there's a lot of benefits. There's good profits. Underlying stock is amazing. Growth aspect is also good. As you can see, 1.6%. It was, of course, higher back in November 7th. So a lot of benefits, a lot of benefits. So that is why I'm invested in AMZY. It was kind of a no-brainer. Amazon's amazing. Of course, that's just based off the stock, not the actual company and their ethics and stuff like that. But Amazon's a great investment, meaning the underlying stock of AMZY. Amazon, meaning AMZY, is a great investment. Of course, this is not financial advice. I always have to mention this because a lot of people think I am a financial advisor, but no. Invest in what you want to invest in. This is just my opinion. This is just my review. And yeah, AMZY. That's why I invested in. That's why it's my second largest position. And I hope you guys enjoyed this video. I enjoy making these videos. Thank you guys so much for the support, by the way. We've been growing exponentially and getting a lot of views. I hope this helped you guys out, maybe on your decision on which ETF to choose. I'll be doing these monthly. Next up is Coney. I'm coming for you, Coney. I'm going to be making a review on that as well. And also, for the next video, we did go into a new position. We went into GUI. Before I end the video, I just wanted to mention that this is also going to be another stock I'll be doing, or ETF I'll be doing a review on. Quite a small position just for now, $20, but GUI's looking good. GUI's looking good, but that's just for another video. I'll see you guys later. Thank you so much for watching. Hope you guys liked this video. Go ahead and leave a subscribe on the bottom. Subscribe to the channel, like the channel, all that sorts. I'll see you guys later.